Here we are again. Kings Hills and Nexus are coming together to give you some updates about what is happening in this crazy world of mortgages. I'm joined, as always, with the knowledgeable Mr. Yates from Nexus.
Hello.
So, David, we have had, over the last few years, some really good interest rates. Then we've had 6%ers.
Yep.
And it's coming down a bit, and everything's changing. What mortgages are out there today? What are we hoping that they're going to do? Bank of England are doing their bit. What are we doing?
So in August, the Bank of England dropped the bank rate to 5%. Finally. It's good news. First time a rate reduction in over 4 years. 0.25% bank rate drop. But in turn, they think there'll be further bank rate drops, certainly in the coming months.
Before the end of the year?
Maybe one before the end of the year. So in turn, fixed rates are starting to drop, which follow swap rates.
Yeah.
And they're really starting to come down. So you can get fixed rates now starting with a 3, late 3s, yeah. Now they're starting to come back down. So there is volatility in the swap rate market. And that's how fixed rates
work.
Yeah, that's how they work.
So if I was a home mover, and I've got a decent deposit, let's say what a decent deposit is, let's say 25%, and I'm selling mine, buying up market, buying the next one. Mm-hmm. Are we in the 3% for those movers? Because it's not, I'm hearing that the 3%ers aren't for all of the market. There's only sections that they're giving those.
It's purchases mainly.
Mainly purchases.
Yeah, mainly purchases, and mainly if you've got a 25% deposit or 40% deposit.
So the deposit is the biggest driver of those 3%.
Yeah, like it has been traditionally. The bigger your deposit, the better the rates available. Higher loan to value, which means you've got a smaller deposit. Mortgages are still coming down, so it's worth keeping an eye on those.
And they're changing all the time, aren't they?
They're changing all the time.
So I think, and what is the driver of a good housing market?
Mm-hmm.
First time buyers. I'm a first time buyer. I've got 5 or 10% sort of to put down.
Yep.
Is there good choice?
So what's happening, there are first time buyer schemes coming out that the lenders are starting to offer. So Nationwide do a good first time buyer scheme, and Halifax have just followed suit. And these schemes, they will lend first time buyers more money than they would if you're not a first time buyer. So you can get up to 5.5 times your income, which may get you that extra bedroom or that better road or that cul-de-sac or nearer the school.
Or perhaps jump you from an apartment to a little house if they're that close.
Yeah, so there are schemes available for first time buyers. The budget is coming up soon, or autumn statement.
And we're hoping that the budget and autumn statement might bring in some schemes from the government point of view for first-time buyers, like they have done in the past.
I'm hoping that stamp duty is looked at, particularly for first-time buyers, and that currently it's up to $425,000. You don't pay any stamp duty.
So if I was a first-time buyer, I know it's difficult to talk rates because the rates are only for today, because tomorrow they could well change.
That's right. Yeah.
But today we are the 5th of September.
Yep.
I walked into your office, said, "Mr. Yates, I've got 30 grand.
Yep.
I want to buy a flat for 300,000. What rate?"
You're getting early 5s now.
Early 5%.
Yeah, early 5s, and we're hoping. It depends if you take 2-year fixed, 5-year fixed, 3-year fixed, or trackers and things like that. So they're hovering in the late 4s to early 5%, depending.
So they haven't quite dropped as perhaps the home mover.
Correct.
Yet. One thing that we're not, and we haven't spoken about sort of previously, is investors. Mm-hmm. Now, I know, having spoken to a lot of investors, the deals out there, it's not just the percentage, it's the payment up front that you pay to a lender as well, the arrangement fee, which are just what's happening. What's happening in that sector?
That sector isn't as buoyant as it once was, but because the rates were so high, the lender has to have some sort of cover in place. So the interest cover ratio for lower rates comes with higher fees.
Right, but are the arrangement fees still relatively high?
They're still pretty high, depending on. Often it's a percentage of the loan.
Yeah.
So it's very much on a case-by-case basis, and it depends if you want to do it as a limited company, or if you want to do it in your personal names. But we are seeing the limited company market start to drive forward.
So in a nutshell, in all three of those sectors, we've done home movers, first-time buyers, and the investment market. We're encouraging people to to go and speak to someone like yourself and say, this is what I've got today, what can I borrow, but to keep an eye on the mortgage world because things are changing.
Yeah, I think the message is, everybody has different situations, different circumstances, different credit ratings, deposits, situations, etc. So the rate is very much tailored to that individual. That's what we will go through.